You are welcome to Module 3, and in this module we want to talk about the investment quadrants. It will help you to understand where exactly to invest your money vis-a-vis your risk appetite. I hope you understand your risk appetite and your risk tolerance. So quickly, let's go into it. So we have this investment quadrants. You can see on this side, which is the right side, we are going to start from a low return, high risk, which means what you are having is low return and high risk, which means the risk involved in that investment is high compared to the return you are expecting, which is the interest rate or the dividend or the yield. It is low. So, and this is not advisable. That's why you can see a total no here. You can see a total X mark, that it is not advisable in any way, in any form. But the essence of this part that we're saying is the moment you see that what the investment is offering you is low compared to the risk involved. The risk is high, but the return is low. Just imagine somebody saying you should come and invest in a new startup, a new business, and it's offering you, let's say, 12% per annum. That is a no-go area. You cancel it because the risk is high. Starting a new business, the risk is high, but the return now is low, which is the reward in return, because every investment has two halves, return and the risk involved. Every investment has risk. So once the risk is higher than the return, then the best thing is not to go for it. Then we have this side. So let's come to the left quadrant, the lower part, which we have low return, then low risk, which means the return is low, but the risk also is low. So we have in that category, we have treasury bills, we have FGM bonds, we have mutual funds, we have fixed deposits. Those are the category, those are the ones we have in this category. The return is low, they don't hedge against inflation, but the risk also is low. So if you are a risk averse person, you are the conservative type, you may want to go for investments like these very quadrants. So you need to understand your risk appetite and understand the investment quadrants. So let's move to here where we have the real estate, we have equity investment and commodity. So what we call shares and stocks investment is called equity investment, which means you are buying the equity of a company, and you can either decide to buy the equity of a private investment, which is a company that is not traded on the floor of the stock exchange, or you can decide to go for a public traded company. But in this case now, we mean a public traded company, a company that is traded publicly. In this case now, which we are discussing in this course, we are talking about public traded company. So the return is high. When you want to hedge against inflation, this is the best you go for. The return is high and the risk is low. Now, some people may say equity investment, which means shares and stocks investment, is also high risk. That is if you are trading on a short term. But once it is long term, because you would have checked the fundamental, you would have checked, when we talk about fundamentals, we are still going to get there, and we are also be looking at what are the things to look out for, even though that will be in the advanced class, not in this class. But the basics that you need to understand, that you need to know in order to get started, you are going to get it in this course. So just wait till the end. It's all it's from module 1 to module 8, and we are already in module 3. So this is the last quadrant, which is the high return, high risk. This is cryptocurrency. When you are also investing in a new startup business, it is the risk is high and the return also is high. The return could be as high as 100%, but you also need to be aware that the risk is high. For instance, new startup, if you are investing in a new startup, the rate at which businesses collapse within the first 5 years is alarming. So that's why you need to understand that the risk is high. And if you are investing in assets like digital assets like cryptocurrency, you are giving somebody your money to trade for you in forex, those ones, they have high return, but the risk also is high. So in module 4, we are going to be talking about shares and stocks, and we are going to be explaining it one after the other. We talk about the difference between shares and stocks as well. If you are yet to subscribe to this channel, kindly do by clicking on the subscribe button and click on the notification bell so you can be notified whenever we release a new video. So we meet in our next video. Stay blessed.